So momentum matters, and that's important because we're facing interest rates now getting pushed up by the Reserve Bank. This will definitely slow the market down. It will definitely cause a slowdown in the pace of price increase, but it will also lead to more listings coming forward. Well, hello again, everybody. One of the key things that matters when you see a negative event come along for markets is the momentum which the market has. If things are moving upwards, if there's a lot of strength there, then that tends to knock back against a lot of the weakness which will come along. And we saw an example of that last year when lockdown came along, a global pandemic, obviously something we're all thinking is fairly negative for basically everything out there. But the housing market in New Zealand in terms of prices, turnover, construction had some good upward momentum going into lockdown as a result of interest rates already being cut 0.75% in 2019, the immigration numbers surprising on the upside, and the Prime Minister confirming no outright capital gains tax on residential property. And what that meant was that whereas, let's say for Auckland, house prices all up for 2019 only rose by 2%, they went up 3.5% in the March quarter of last year. For the rest of New Zealand, outside of Auckland, increases were 2% each quarter in 2019, 3.2% in the March quarter of last year. So momentum matters, and that's important because we're facing interest rates now getting pushed up by the Reserve Bank. This will definitely slow the market down. It will definitely cause a slowdown in the pace of price increase, but it will also lead to more listings coming forward as vendors who have been hoping for higher prices go, seriously, maybe it's time I got on with my life. And that maybe is an interesting thing once eventually our borders are opening up next year. A lot of vendors deciding they're going to sell, but that's a story for maybe 6 months or so down the track. Now, what I mean here by upward momentum is that, sure, the tax changes announced by the government in late March, the LVR changes from the Reserve Bank in February, they caused our real estate markets around New Zealand to slow down. The slowdown only lasted 2-3 months at an absolute stretch. And over the past 3 months, things have actually been picking up again. I can see in my measure of FOMO, fear of missing out, 3 or so months ago, 49% of real estate agents were saying they see FOMO. Now that's up to 66%. Most importantly, you look at the increase in average prices. Over February and March, the total increases added up to about 7.5% in that 2-month period. Since then, we had April, just a 0.5% increase in prices around New Zealand. May was 0.8%, June 1%, July 2.4%. If you recall in the budget, Treasury said house prices over the 52-week period from July through to June 2022 will rise only 0.9%. They did that in the first 2 weeks of that 52-week period. That upward momentum is going to be some cushioning against the slowing of the housing market, which will definitely come about to some degree, where we're struggling to grasp at the moment as a result of the interest rates going up over the next maybe 12, 18, maybe at worst 24-month period. All the best out there.